Eh, Okay, cool. Now we're going to go. So I'm just gonna go ahead and begin. Now, how to approach prop firm challenges. This honestly is very, very simple, but I think it's very important to kind of like put it out there on how do I approach prop firms and how do other traders who have been successful with the prop firm model, how have they been able to do that as well, right? I have a bunch of friends who use prop firms and I want to make sure that I show you guys exactly how to tackle them and the different ways to do it because everyone's going to have a different type of style and they may resonate with one style versus the other. Now, it's very simple, right? And I'm going to focus on CFDs because it's more that's more what I've been trading. Yes, I've traded Apex, but again, until I have a little bit more experience in the future space, especially trying out other firms, then I'll kind of make separate videos on that. So there's couple key factors. There's really just three key factors. Number one is budgeting. Number two is your risk approach. And number three is once you're funded, how to manage the account. So again, if you're someone who's struggling to pass a prop firm challenge, this is not going to pertain to you. But if you're someone who can get funded, but you've always struggled on the funded accounts or to get that payout, because most traders actually, even like I forgot what the statistic was, but even the people who get to the funded account, a huge percentage of them lose and they never get the first payout, and that's a problem. So let's go ahead, let's get straight into it. So budgeting, right? I've never seen anyone really talk about this, to be honest. And I thought this was like something that like most people would do, but I realized that's not the case. So what think about a business, right? If you've ever ran a business or if you've ever been in some sort of managerial position, typically a business is going to budget for certain things, right? For cost of goods. They're going to make sure that they buy a certain amount of product in order to, and they don't want to overstock, right? So they're going to have some sort of budget, right? Or let's just say even in your personal finances, right? If you have very set risks, like you have rent, you have grocery, you have the electric bill, etc., you're going to want to budget according to that, right? However, most traders, when it comes to the prop firm challenges, they don't have the same approach. So I wanted to really address this, right? In my opinion, every trader should make sure to set a certain amount of money for multiple accounts. That is extremely important, in my opinion. You want to be in a situation where you can pertain for multiple accounts. So let me just give you guys an example. Let's just say you set a monthly budget of how much you're willing to spend in prop firm challenges, right? Here's an arbitrary number, 500 bucks, right? Yours might be lower, yours might be higher. So again, you're going to adjust this based off of what your current monthly budget that you can afford for challenges, right? And pick something that if you lost it all, yes, it would suck, but it would not really put you in like that mental despair when it comes to trading. And we all know how bad that can be being in that situation. Nonetheless, right? If you are someone whose monthly budget is $500, the 100K accounts are typically going to be 450 to 500 bucks, maybe a little bit more. But regardless, it's gonna you pretty much you could just you're gonna have to spend your full monthly budget on just one account, right? And now you might be someone who's like, oh, but I prefer the 100K accounts. But the thing is this, if your spend is 500 bucks and you only want to buy one, you're only left with one account, unless you can get a bigger budget, right? But if that's the case, then don't do it because at the end of the day, you want to give yourself the most chance to win. So avoid spending on just one challenge. So number one, you need to have a monthly budget. I highly recommend that everyone does this. They have a monthly budget that they tell themselves, I'm not going to go past this amount because then it becomes gambling, right? For example, back in the day before prop firms were a thing, I had to deposit money into my trading account, and that was the amount of money that I could afford to lose. With prop firms, you can actually buy these things on credit cards, which is, you can put yourself in debt. And these are the things, again, no one talks about. Like, you don't want to be in that situation. So set a monthly budget of how much you're willing to spend on prop firm challenges. And I ideally use cash, like use a debit card. Don't use credit card. Unless you're someone who just does it for the points, but that's a separate discussion. But yeah. Um, do something where you're comfortable. If you lost full budget, right, then you're good to go. Now, for example, in this situation, this person, in my advice would be avoid spending on just one challenge. Now, the 25K accounts, they're $156, right? So this allows you to pretty much buy three accounts instead of just having one. Because if you have three accounts, and you diversify. And we're going to talk about like the trading approach as well to this, right? The whole goal is that you're kind of diversifying the trades across different accounts. So if I take trade one on this account, boom. right? I'm not taking on these other ones. If I'm taking the second trade, I'm taking it on one trade only, etc. So then that way, that gives you the best opportunity to pass a challenge because you have multiple opportunities to trade. Versus if you're doing one challenge, all the pressure is going to be on that one account. So this is very, very important. You guys want to make sure that you're having, first of all, have a monthly budget, right? And then also avoid spending on one challenge and then buy a challenge account that you can buy about 3 to 4 of them. That would be the ideal range. If you go buy 3 to 4 challenges of accounts that you're willing to lose, um, that, in my opinion, is the best way to go about it. Now, let's talk about the approach. That's the budgeting. That's number one. You have to have a budget. Number two, what's your approach going to be like? So just like in trading, everything has a pro and con. So I'm going to show you guys the two different approaches, including the pros and cons of each style. There's really only two approaches when it comes to prop firms that a lot of people utilize. And again, this is for CFDs. This actually won't apply for, well, actually, it does apply for the futures props, but you'll see what I mean. I have a slide talking briefly about that. Now, you're going to have the aggressive versus the conservative approach, excuse me. So we're gonna have the aggressive versus conservative. Now, again, this is very baseline. It's not complex. And I'm pretty sure you guys have been aware of this, but I'm gonna put it down as well. Actually, let me go ahead and not sure why this is okay. Yeah, I'm not sure why this is. Okay, yeah, I'm not sure why this is. All right, but at least it's not covering this. Regardless, aggressive approach versus a conservative approach, right? This approach is honestly how I personally trade prop firms. Just to give you guys like again, have a monthly budget, buy like up to 3 accounts, 3 to 4 if you can. And I personally like this approach. So the approach is very simple. I'm pretty much risking 2 to 3% per trade. Now, honestly, you could risk 4%, but like what I've noticed now with prop firms, if you're risking 4%, like you're more than likely possibly going to get flagged and might get banned, right? So I kind of stuck to the 2 to 3% for the same exact reason. It used to be 4%. Then I started seeing people on Twitter kind of like complaining because they're not allowed to buy challenges because they're higher risk. Even at 3%, sometimes you'll get like an email of like depending on the firm, telling you that, oh yeah, you're risking too much, blah, blah, blah. And they might reduce your margin, but that's perfectly fine for me. Like Alpha Capital does that. Now, because so if you pass a challenge with like 1 or 2 trades, they typically flag you in that, but you still get the account, they just reduce your margin or they give you lot size restrictions, which again, for me, it doesn't really matter because the lot size restrictions on a 100K account would be like 20 lots. And that's more than enough for me to make my 3 to 5%, which you guys are going to see in the funded stage. Now, again, I'm risking 2 to 3% per trade, and I aim for a 2 to 3 hour move, right? Now, again, you want to, the thing is this, you have to identify the setup that provides this, right? Don't just like take a trade like, oh yeah, I'm going to hold for 2 hours. No, it's not how it works. You got to find this trade that the realistic deal well is about 2 to 3 hours. And then you only need 2 consecutive wins with this approach to pass a challenge, assuming it's 8%. Now, here's the key thing when it comes to this. Let me just change this. Here's a key metric though. 3% risk with a 2.5 R, that's kind of the sweet spot because 2.5 R at this risk, you pretty much pass it in one shot if my math is not incorrect. Or I think it's a 7.5 percent. So maybe just above a 2.5 R, you pretty much pass the challenge. Now, while you can pass this quickly, the rate of ruin is also higher with this approach. So obviously, like you can pass in 1 or 2 trades, but obviously, if you lose a trade and you're down 3%, doesn't mean that the account is over. It just means that you're mean 3% drawdown. Now, it's going to also depend on your risk tolerance. That's also another thing I really want to talk about. It's going to depend on your risk tolerance. Are you someone, and you got to be honest with yourself, are you someone who can risk this much amount, right? Now, if you have multiple accounts, in my opinion, it's not really as aggressive because think about it. And I'm going to talk about this on let me go back here. Let me just bring this point up on a slide, on an empty slide. If you have 3 challenge accounts, right? And I'm risking, let's just say you're risking 3% per trade. Same thing with the challenge accounts I talked about before. You never want to take the same challenge. I'm sorry, you never want to take the same trade on every single challenge because at that point, you might as well just buy one account, right? The whole goal of this is to diversify the risk. So again, let's just say I have a 100K account here, 300K accounts. if I'm taking a 3% risk and I'm -3 on this one, but what if I hit that 2.5, 2.6R and I pass this one, right? This one's in drawdown, but then this one I get to phase two. And I'll talk about phase two later on. Then this one, maybe I take a 3% risk and then maybe the trade goes in my favor and then hits break even and then I'm flat, right? I'm diversifying the trade. I'm not taking every single trade on every single account. You diversify because all you need is one. Think about it. This one could be -3. This one could be -3. Then this one hits, and then this is plus 7.5, or you actually hit the 8% profit target. Right now, this one is on its way to phase two, and you're getting one step closer to getting funded. And then obviously these ones, like, you'd have to bring them back from drawdown, but that's fine because again, if you're risking 3%, you have to stay consistent. Now, obviously, if you have an eight, let's just assume that you have like a 10% drawdown, right? You can obviously lose -3. Then the last trade, I typically would go the full 4%. You get what I'm saying? Because at that point, if you risk a 3% again, you're gonna have 1% worth of drawdown that's left. So you might as well just risk the remaining amount of the account. So very, very simple. It's not complex, but again, you need to have a structure for it. And again, you also want to make sure you're taking good quality trades. Like that goes without saying, right? Like you don't want to be the person who's not taking good quality trades because then you're just wasting the trade opportunity. Now, this makes it easier also for what? The aggressive approach makes it easier to wait for the higher time frame plays because you know all you need is one higher time frame play and you pass your phase one. Now, conservative approach. This conservative approach is the 1% risk per trade. In my opinion, you don't want to go below this. Like, it doesn't make sense of doing 0.5% because you're going to take way too much time to pass a challenge that way. Now, again, if you're a beginner, you're someone who's still learning, this is assuming that you're kind of like, all of this is assuming that you already know how to trade, you have your system, you're very comfortable with putting on risk, but maybe you struggle in the prop firm space, right? Maybe you're better off trading personal capital, maybe you want to get involved with prop firms. This is assuming that you already know what you're doing. If you don't know what you're doing, then I would have a completely different discussion. I'll just tell you guys, you know, either try like a free trial account, some firms offer that, or just trade a demo account until you learn and have a full system. Now, the major con, obviously, with this is the time element. Like, I'm not trying to spend a whole 2, 3 months to pass a challenge, right? That's the biggest problem with 1% risk, especially if you're someone who doesn't take that much, your frequency is pretty low. Now, the pros, again, you're likely to not allow the challenge to not blow the challenges, and it's easier to handle any losses because if you lose 1%, right, like most people are okay with losing that. Versus if you lose 3%, maybe you go on tilt because you get upset, right? So that's also a very big part of this as well. Can you handle with the aggressive risk approach? Um, However, it'll take you much longer, and again, it'll take you much longer to pass the challenges. So that's kind of my uh, thought process. I'm always going to go through the aggressive approach, especially with the monthly budget, because now it's like you know how much you're risking. Think of it like this: your monthly budget is how much you're risking if you had a personal account per trade, right? So if I have a personal account and I'm risking $1,000 per trade, I'll put that $1,000 into a budget that I have in order for me to kind of like give myself the most chance for success. That's all this is. We want to give ourselves the best opportunities and the best chances for success. Now, when choosing between aggressive or conservative, here's my personal approach. I already kind of talked about it. You guys know I pretty much go for the aggressive approach. Now, however, it's very important to know it's only for the phase one. I do not do aggressive for phase two because the hard part is over. 8%, right? This is a big number to hit. Versus the conservative approach, I'm pretty much just going down to that 1 to 1.5% risk on phase two because this one obviously is going to be 5%. So you don't keep the aggressive approach once you're in phase two because it doesn't make sense. Phase two is almost like 50% lower comparatively speaking to phase one, but 8%, this is going to take a long time to hit. So if you do the conservative approach. However, if you do a conservative approach on phase two, even with 1% risk, if you hit a 3R, boom, you're halfway done, you know? So in my opinion, this is kind of like my approach. Aggressive on phase one, conservative on phase two. Because once you're at phase two, it's less amount to make, and you just gotta like you're pretty much almost at the finish line. So there's no point of rushing phase two. Now, this approach again is for CFD props. Future props, since there's only one phase, the conservative approach works much better there. So if you're someone who's like actually a very conservative trader, you actually might want to look into futures props. All right, I've been experimenting with them. I'm going to offer a little bit more insight once I have more experience with multiple different firms. But because there's only like one phase, You can actually have the more conservative approach on that one. The only reason why I don't like the conservative approach on CFD props is because you have to hit 8% and then you have to hit 5%. So 13% total. If you're risking 1R, you need 13R net winning trades in order to pass. It's going to take a very long time to do that, you know? Futures props, however, you only need like 3%. I think like for the 50K accounts, for example, on Apex, all I needed was a $3,000 gain on a 50K account. The drawdown is obviously much tighter, but like you get my point. Like you can be a little bit more conservative on that because it's only one phase and it's not 8%. So maybe that's something that someone who's maybe more conservative, who doesn't have the risk appetite to be aggressive, they might look into futures props and say, hey, you know what? Maybe this is going to be my approach, the conservative approach, but with a different asset class. Okay, now let's go to the next slide. Now, what to do once you're actually funded, right? Most people actually get to the point once they're funded and they still don't get a payout, which is insane to me because I don't think it's that difficult to get a payout once you're funded. Like, because now at that point, number one, you want to go conservative once you're funded. Let's just say that, right? You don't want to be aggressive anymore. There's no need to. The aggressiveness is only to save time. But once you're funded, that's it. You can extract money out of this account. So you want to be as conservative as possible. Even if you want to go down to 0.5%, beautiful. Get that first payout, make back your money. Now, it's very simple for me. Never trade the CFD accounts together as well. Now, the profits are more, but the goal is to extract money. The same thing I talked to you guys about the challenge accounts is the same thing I do with the funded. I never trade the CFD accounts together, right? The funded accounts. Because again, even though the profits are more, but the goal is to extract money. And if my goal is to extract money for as long as possible, I don't want it to be a situation where if I take one trade on all three accounts or all five accounts or however many accounts, and I'm going to talk to you guys how much you guys should aim for at the very minimum. I don't want this to be a situation where if I take one loss, I'm down 1% on every single account, right? It just doesn't make any sense to me. Now, for me, the goal again is minimum three accounts. And let me go ahead and show you guys the process, right? This is three funded accounts. The same way that I talked about how, try to budget so you can get 3 to 4 challenges. Ideally, you can get to the point where you can get 3 to 5, three minimum on the funded accounts, because then this is where the magic happens. And let's go ahead and talk about it. It's very similar to what I talked about earlier, right? Which when you have the three funded accounts, it's the same approach I'm doing on the challenges, right? If you have three funded in here, you're diversifying your risk. So if you're taking a 1% risk here, 1% risk there, 1%, you're diversifying all the trades. You're never taking the same trade from this approach on this. Yes, again, if you're someone who wants to like maybe take the same trade because it's a swing trade, and maybe you're someone who doesn't trade that often, maybe you trade like, once a week, you could then experiment with that. But if you're trading like, once every other day or something like that, your frequency is a little bit higher, you definitely don't want to do this. Now, if you're risking 1%, and then let's just say your average risk reward is 2.5, like 2.5 R, right? As soon as this account gets to about 3 to 5%, right? This account is no longer going to be traded for me. I'm leaving this until the payout date, because you want to secure that amount. Now, why do I always preach 3 to 5%? Because number one, if you're risking 1% on a trade, let's say this one's a winner and then these two are losers, right? This one's already up 2.5 R. This one might be minus 1 R. This one might be minus 1 R. This accounts at 2.5, so just under 3% threshold. You could, even at 2.5 R, you can just secure the payout. You're pretty much close within that 3 to 5%. Get this payout window and then work on these two accounts. While you get the money from this account, now you can, let's just say you take the next trade, maybe this next trade is like a 2R, now you're up 1R. Then maybe on this trade you hit a 3R winner, right? And then now you're up 2R on this account. You see what I mean? Now, maybe you take another loss here. Now this one's pretty much at, 0%. Then maybe you took another trade here and maybe you just won 1R on a trailing stop loss. That's right. So now you're up 3R on this account. This account, now you wait for a payout, you work on this account. Now, once you kind of extract the payouts, once you actually hit the payout dates and you get, let's just say, let's say this is a 100K account and you make 2,500 bucks. And after payout split, like you're making, let's just say $3,000 just to make it easier. After the 80%, you're pretty much taking home 2,400 bucks. Right now, what you can do, and this one's $3,000 also, maybe you get 2,400 from this account. Right now, you just made $4,800. Now, in my opinion, what you could do in this situation is I want you guys to treat it like a business. If you can get to this stage where you have multiple accounts, again, reinvest into different challenges, but only do a challenge when you're like, if you're kind of like mentally checked out from trading the funded, maybe you're exhausted, maybe you have a week like that, or whatever the case is, then do that. I don't like to trade my challenges and my funded at the same time. I feel like it's a little bit, it's weird. It's like this, it's a focus thing. But once you extract money, try to get as many funded accounts as possible because as you guys see, like this is very, very possible. Now, let's just even say you're in a situation where you lose, you're on a losing streak. And this is why I'm a big fan of prop firms. Because if you're on a losing streak, you can still extract money. So again, same scenario. Let's just say you have three funded accounts, and let's just say you're going through a tough time. -1 R, -1 R, -1 R, three straight losers. But then you hit that second trade, and that second trade hits like 2.5 R. Now this account is positive, 1.5 R. If you took the same trade on every single account, you would have been -3 R. This is why I preach, do not do that because you will go through a losing streak. I don't care how good of a trader you are, you will go through a losing streak. This is just par for the game. So why would I be down -3 on all three accounts? That's all the money that I have. In this situation, I'm actually up now 1.5 R. If I hit it like a 2 R, 2.5 R winner. Versus if I took all of them on the same account, I hit that 2.5 R winner, I'm still minus 0.5 R. That's why to me this doesn't make any sense to kind of diversify the risk. To not diversify the risk. Diversify the risk, try to get as much funded accounts as possible. Now, obviously, if you have only one funded account, just be more conservative. Try to get that payout so you can reinvest in challenges. If your monthly budget for challenges can come from your payouts, that is that sweet spot because then you're never putting your own money back, right? You're just reinvesting some of the profits. And also, now I'm not a big fan of some people like they reinvest the full amount. No, pay yourself something, right? And then maybe reinvest 25 to 50% of profits, however much you guys want to do it, in my opinion. It's really up to every single individual. Now, this is kind of my approach when it comes to prop firms. It's very, very simple. I'm going to show you guys like now we're going to go into trading view, but before that, let me know if you guys have any questions in regards to like these approaches. It's very simple, but yeah. It's a very simple approach to have. And then you're going to ultimately decide which type of approach we have. So if you have any questions, let me know. And I'll just show you like a very simple example of like what type of trade setups you want to take in order to hit that benchmark. Because you have to identify good trading ranges in order to get that 2.5 to 3R to pass it in like one trade or two trades. All right. So let me go ahead and go into trading view. So now for me personally, I like to use, you guys already know, I like to have a 4 hour chart. I like to have a um, daily buy. So let's go over to the pound. And let's use the example that we identified earlier in the week, right? If number one, when I look for these types of trades on for challenges, what I want to do is I always want to identify a weekly or a daily DOL that has not been traded to. You guys already know this, right? This is a perfect example on GU where we had the market sweep a low and then we have an impulse push back up into the range. Now, just because the market takes a low does not mean we automatically go up. We obviously need to see structure to confirm it. So you guys already know this is kind of my approach. And I remember this was the day here on Monday. The market sweeps liquidity. We have one impulse, the market fails to drop lower, and then we were forming this daily EBP at the same time. Um, yeah, I'm walking it through right now on pound. So when this daily candle was forming as a potential EBP, obviously then I go down to the 4 hour time frame. And we obviously had this breaker point in here, this prior structure. The market took out the liquidity, we pushed back above, and when we go down to the 1 hour, we had this very clear objective, right? This was a trade that was in hindsight. We talked about it on Monday. Now, the one thing I love about this is that we pushed back above. The market has a prior high. We had this breaker point. If you draw that out in time, it also overlaps with the fair value gap. So we have a unicorn. Now, why is that a breaker? Because again, we took out the prior day low in here. Market pushed back above the prior high, and we have a fair value gap. The market came down into the golden hour time window at 9 o'clock. And what happens, right? Now, this is what I mean. I want to try to find 1 hour entries with a daily or weekly objective. Because again, with this type of setup, right, we were putting the stop loss below the candle bar low. The candle that broke above structure, right, and closed above, that's typically where I put my stop loss. This one trade was what? 3.2 R. So it's very simple, guys. Just find a trading range where the marketplace is giving you a very clear 3R move. If you can get a 1 hour or even a 4 hour entry with a daily objective, it's this simple. This one trade could have passed you the challenge. And that's my kind of like my approach. Now, maybe you want to only use EBPs. It's very simple. Do the same thing. Let me see if there was any EBPs this week. That um this one wasn't really EBP on NQ. Um all right, I don't want to use oil, but I might just do it because it has to again okay, actually no, dollar cat. Some of you guys were actually watching this one as well. You see how we have a 4 hour EBP? Look at how what you could do is this, right? Like if you were anticipating a reversal at this very specific point, right? What you could do in this case, identify this overall range. You know that if you this is your buy level, you know that you could then look to target this. Now, I'm not even going to go down to the 4 hour time. Let's just go down to the 1 hour. I think there was a fair value gap, but I don't think it hit. Let's just say you got in at this breaker point, right? You bought around here. Your stop loss goes below the 4 hour bodies of the candle. That's kind of how I do it. You see, this is why you ideally want to kind of go for, I'm sorry, the order block range in here. Stop loss there. That's why I say you guys kind of want to go ideally for like a bigger range, and a better entry because then like, you have to deal with this. And this is not the biggest risk reward. 1.6 R comes back into the range. Probably would have adjusted the stop loss at this point or taken profit. But again, just to kind of illustrate the point, like I just assume that the fair value gap was like up here, right? Let's just assume that. Then this trade is right here, like over 2.6 R. Let's just assume the fair value gap is up there. I think, like, again, just for hypothetical reasons, let's just assume that this fair value gap was like up here, right? There was no fair value gap here. The fair value gap was up here, and this was your target after the 4 hour EBP can. Then you're in a situation where this one trade, again, 2.7 R, you pass your evaluation. So wait for these opportunities where the 4 hour, the daily, and the weekly coincide because it gives you the biggest range. That's what I want you to understand. You need big ranges to get those 2, 3 R plays. And again, the beautiful thing about it is you can get those 2, 3 R plays without having to like try to snipe a 5 minute entry. Yeah, Euro JP weekly. Let's look at that. Yeah. Oh, yeah. Like this actually, and also dollar yen. Yeah, dollar yen as well. Like beautiful fair value gap and structure. Daily forms an EVP. You can then target maybe this volume imbalance in here, right? And then you just look for the lower time frame entries, and trade it up to here, right? Like maybe you're a buyer there, stop loss here, take profits up here. Again, I'm just guys showing you guys an overview. Like you want to identify clear daily ranges and try to find and identify a setup on the 1 hour and the 4 hour. This gives you the opportunity to get that 2.7 to 3R, which will pass you your challenge in one shot. So yeah, guys, very straightforward. And this is kind of like my approach to prop firms. Is waiting for those higher time frame plays, waiting for a setup like that. GU was a prime example because it was clear DOL, right? We formed an anchor point on the lower time on the higher time frame, and then all I'm doing was on the 1 hour, just looking for higher highs, higher lows to buy for the market to go back up. Do you have recommendations on which platforms or are they all decent? In my opinion, Cameron, I like funding pips for CFDs. I think they're pretty solid. Alpha Capital is pretty solid as well. If you could trade with FTMO, they're solid, but they're more expensive and they're more difficult because now it's 10%, right? So that's kind of like one thing that's not ideal. And yeah, I would recommend those platforms realistically. Are you a fan of the straight to funded props? Honestly, I took a brief look at them. Not really, because their consistency rule is crazy. It's 20%. So like one trading day cannot equal 20% of your overall profits. That's a little asinine, in my opinion. Like 30% is already pretty difficult, but bro, 20% is pretty aggressive. Like you can't afford losing days, and I don't like that. So I'm not a big fan of those, to be honest. But yeah, guys, let me know if you guys have any other questions. And then, yeah, again, very simple. Like, it's not, I don't overcomplicate this. I know it's all math at the end of the day. You know, with this, what you're going to do. As long as you have the proper budget, as long as you're waiting for the proper setups, there's no reason why everyone in here can't get funded. Especially, again, budgeting. But you have to also know what to do in terms of how to trade. Because obviously, you don't want to kind of like do that. Who has the best? Actually, yeah, I'm sorry, guys. Give me 1 second. I'm sorry. Give me like a few minutes. All right, sorry about that, guys. I'm back. But yeah, so who has the best spreads? I think Alpha does, to be honest. Alpha Capital. The problem with funding pips is like if you're putting on size, you're probably gonna get slipped. They definitely have the most slippage. How about Fender Next for CFDs? I've never tried them, to be honest. I've never tried them, but I've heard they also have pretty bad executions for Funded Next. Is it better to get the no swap challenge? I don't know. Like, if you're gonna hold trades consistently and you're gonna hold trades through Wednesday where the swap is extremely high, then yeah. But for me, it's like I don't want like there's no point of paying that extra charge because most of the time the no swap accounts you have to pay a little bit extra. In my opinion, it's not. That's not gonna make or break the whole situation. But yeah, upon the next, I've never tried them, but I've heard that their spreads are pretty bad and their execution is very bad. Like you'll get slipped pretty bad. So again, I don't know how true that is. You guys can kind of look at different review sites, but yeah. But yeah, guys, pretty straightforward. If you guys don't have any other questions, then yeah, the recording will be up pretty much right now. It'll probably take like 20 minutes to actually upload. But yeah, let me know again if any other questions, I'll answer them now. If not, you guys can go ahead and we'll enjoy our weekends. Omar, if you're looking for long and price takes the Friday high and then it's coming down, it depends. It's a good question. So like what he's asking is if there's a Friday high in here and I'm looking for longs and the market hits that Friday high, will I buy that dip? Because I always talk about how I don't like to buy dips when the market takes out the key liquidity pool. It honestly depends, bro, on like how significant the higher time frame is. If the daily and the weekly is so bullish and like there's a very clear objective, I'll buy that dip. I don't care. But if I don't have the best daily or weekly time frame, sometimes I'll avoid to take out this trade. For example, like let's look at NQ, right? And yeah, well, yeah. So we took out the Friday highs, right? So let's just post it there. So we took out the Friday highs, and I talked about this on stream. Is like I was kind of like weary about buying this only because now we're kind of inside of this 50%. And this is why I tell you guys this because I don't say this type of stuff because it's like random, right? Like I've taken so many losses like this. Like if I was looking for a reversal on a Friday, but I'm not stupid. We're inside of like the 50% range, right? The discount. Now, in this situation, the market takes out the Asia range low and then we kind of push higher. And we also took out the Friday highs. Now, would I go long? No, because the market took out the Friday highs and on the daily time frame, I didn't see any like significant like bullishness. Now, again, in this situation, right, if I have like this, where the market has a clear potential higher high, and then we also form an EBP. This is like a very like weird EBP, but like again, based off the definition, we take out the prior bar low and we close above the prior bar opening price. So again, it looks weird, like because it's a doji, but nonetheless, right? We have like the market potentially forming a higher low, very clear. Like I'm very bullish on it. So now in this case, I'm more than inclined where the market did take out the priority lows and then well, this was the overall target, right? But let's just say the market took out the Friday. Let's just say the market took out this liquidity pool, and then, or like, let's just there's this fair value gap. You see, like this is why I wouldn't look at this as like, oh my God, this is a strong resistance, because again, we know that the potential higher high is here. But ideally, you want to get entries around here, or you want to get entries around there. You don't want to get the entries too close up. But yeah. Um, Thanks for the webinar, bro. Appreciate you, Umber. Can you show us? Oh yeah, how to copy trade on. Let me show you guys that actually. So let me just log in. I'm gonna have to log in. It's like super annoying because like you can't copy it and paste into Tradeovate. So yeah, let me just log in. I'll show you. It's very, very simple. Very, very simple. My friend showed it to me. It took me like literally 2 minutes. Uh, okay, yeah. Okay. All right, pretty simple and straightforward. So what you want to do is you go here, right? Typically, they're going to be all the accounts, right? I just want to do manage groups, and then so these are going to be here available. You just drag them. So like for example, you just drag them into this added section, and then you save it, and then you it's going to tell you like to save it under a group name. Now, once you make that group name, you want to make sure to change it. So my group name is just called live. Once you make this group, because sometimes it'll be on this account, on one of the accounts, you want to make sure that the check mark is on this. Then you trade it on here. The thing is this though. In order, I don't know how familiar you are with Tradevate, but like if I want to trade one contract, right, across the four accounts, I have to do four. And then you press buy or sell. And then now the four, it gets distributed. So it's not like you put one contract and it does one contract on every single one. That's one thing I don't like about that. It's kind of annoying. So if you had 20 accounts, you would be putting 20 if you want to trade one contract per account. You have to put the amount that you want to do. Now, if I want to trade on my four accounts, right? If I want to trade two contracts, I'm gonna have to put eight. And then it's gonna go two, 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 two. A little bit annoying, but yeah, but it's very simple to group them all together. A little more Bitcoin. What do you think? Yeah, to I think crypto's going to keep continuing higher, to be honest. This actually hit the weekly fair value gap as well, because I know someone was talking about like what if Bitcoin comes down in here? I don't think so. Like we have this weekly fair value gap. I don't know if ETH, to be honest, is going to hit its fair value gap. We'll see because it didn't create one just yet. But I'm still pretty bullish on Bitcoin. How more 100% monthly payout or 75% biweekly? I prefer the bi-weekly. I was debating on this like last month with one of my funding pips account. Should I just do a 100% monthly? It's not worth it, bro. I'd rather just like secure the money. 1 month, 30 days is a long time. Omar, for long, how long do you need Asia range low to get taken? If it's not taken, then how will you approach for long? Um, Ideally, I do get the Asia range low to be taken. If not, sometimes what will happen is this. Sometimes Asia has like a big range, right? And what happens is then there's like some sort of fair value gap on the 1 hour or 4 hour. Typically, this will happen. And instead of Asia range low will actually be like a higher high. I'm sorry, a higher low. In this case, if there's a fair value gap and there's like a 4 hour level in here, and the market drops into that level, sometimes I automatically assume that Asia range low will not be taken out. As long as there's like a clear bias. So that's kind of like a very straightforward way that I have that approach. But yeah. All right. Appreciate it, guys. This webinar I'm gonna upload it right away. So then, because I know some of you guys were requesting it, just yeah, right away, just to be put up there, so you guys can take advantage watching over the weekend. Um, and yeah, guys, I'm gonna do the weekly commentary probably sometime tonight or going into tomorrow morning. And yeah, hope you guys all have a great, great weekend. Take some time off, but also, go ahead to go through the course content, study a little bit, but also enjoy the weekend. Appreciate it, guys, and I'll see you guys going into tomorrow for the weekly commentaries.